What's up, Lab Coat agents? I'm Vanessa Noble. I'm an agent here in Anchorage, Alaska. And as you may know already, I am a service member with the Alaska Air National Guard. So one of my biggest passions is educating veterans and service members on wealth building strategies through real estate. And so today I'm really excited because I have one of my favorite groups of people with the active duty passive income community. And they're really awesome in all of their experience and every aspect that they have taken on their journey to invest in real estate. So I wanted to bring them on here today to deliver some information about how you can really approach and help veterans when it comes to their investment path in real estate. I know in so many communities in our country, every realtor has a passion and an affinity for helping veterans. So I wanted to share their experiences with you so that you can see how you can best support your veterans in their local real estate investing endeavors. So I have with me Tim Kelly, Eric Upchurch, Spencer Thomas. They are all part of the active duty passive income, and then we might have a couple of people join us as they are available with us during this call. So super excited. Thank you guys so much for being here.
Yeah, thanks for having us.
Yeah, let's do this. Absolutely.
Yeah, we've been waiting for this for a bit. So, Tim, why don't you start with sharing with the community really what active duty passive income is, because sometimes people get a little confused with the name because it says active duty. So share a little bit about that and the evolution of what you guys are.
Yeah, active duty passive income. So there's a lot of things that we do, and it might be confusing to try to just start explaining it. So at our core, we are an education ecosystem, okay? We are educating military members, whether active duty, veterans, past or present, right? Family members, spouses, how to achieve financial freedom through real estate investing and other online side hustles, right? But at our core, again, education through military real estate investing. That includes primarily, we have a best-selling book right now that's free called Military House Hacking right there, which is really encompasses what I believe is the most underutilized benefit, the VA loan, right? Encompasses how to house hack using your VA loan to really catapult your wealth generating abilities. So we have a best-selling book. We have a podcast, an amazing podcast where we've interviewed people. If you're familiar with the Rich Dad, Poor Dad author, Robert Kiyosaki, Garrett Sutton, Tom Wheelwright, Grant Cardone. And then, those are very special, but we also interview people who are crushing it in real estate investing, who are junior enlisted or junior officers among the branches. Couple that with an amazingly rapidly growing Facebook group and an academy and a mastermind for residential real estate and an academy and mastermind for multifamily and commercial real estate. Couple that with an insurance brokerage and a mortgage brokerage. And it's just insane because we're just so passionate about helping people and doing a one-stop shop for anything that they need to be successful while achieving their financial freedom goals. So I'm sure Spencer could talk more, Eric could talk more, but in a nutshell, that's pretty much it.
Yeah, I always tell people, like, you guys are an educational platform. And the cool thing, whether you're a veteran, a realtor, or not a veteran realtor, you can definitely utilize the materials that Active Duty Passive Income has on their website to help educate and fill those gaps for your veteran clients. So it's a huge resource.
Yeah, we hope you do too, because it's coming to you from a veteran-run companies, for vets, by vets, and so to give, even if you're not a veteran, to give you that perspective of how we look at investments to how to buy a primary home. We look at that in a different way because of some of the ways we move around the country doing our jobs.
For sure. And Eric, what role, and maybe you guys can define a little bit what role you specifically have in the company and kind of where your wheelhouse and passion is.
Yeah, currently Chief Operating Officer and one of the co-founders of ADPI. Right now, personally focused on commercial multifamily. Tim and I and Spencer invest together on commercial multifamily properties across the U.S. But I started out in single family. One of the reasons that we wrote this book is because, and the reason that we're an education platform and the reason we exist is because we really are passionate about making sure that our members and just our military family can understand what we didn't know, what we wish we knew. Buying a house in 2006 with a VA loan, 100% leveraged, and not understanding that that was going to become an investment property for me later on. Had I known what I know now, I would have invested some time and resources into educating myself on how to evaluate that as an investment, because it's going to be a rental most of the time for military members. So, I started in that single family, realm, and now we have this unique ability to understand what we know about military and to be able to share it. And education, empowerment, and helping others grow is what we're all about. And we love it. All of us on the team thrive off of the feedback we get and off of changing one life at a time. And it's an amazing thing to see.
Absolutely. Absolutely, Spencer. And so you're kind of a different part of the picture with how ADPI supports service members. So share with us a little bit about how the education piece relates to clients in the real estate space.
Sure. So I came to be a part of ADPI about 1.5 years ago. I saw a post by Markion asking for some help, responded to it, having served in the Army Reserves myself, and really seeing there was a need for the group and what we offer. I came to the group with a background in financial services. I actually started off as a teller, worked my way up in the private banking space for about a decade. I was a private banker. And in that role, I understood and saw how a lot of people amassed wealth. And a good portion of it was through real estate. It was buying and selling and oftentimes holding multiple forms of real estate, residential, commercial, the gambit. And so at the beginning, I was sort of there to help form some strategic partnerships with some key realtors and some companies and such, but it's morphed into now I'm the director of financial services. I help to create our insurance brokerage firm, our lending firm on American Mortgage Network. We're building out a commercial lending division as well. So everything to do with financial services falls under my purview, and it's been an honor and a pleasure to create it and to work with a lot of these agents that have been sending us their clients on the lending side. I'm an acting loan officer as well. So it's been a lot of hats to wear, but this has been the most fun I've ever had. And it's at a point where sleep is bothersome.
When I laid down last night too, I was like, okay, I have to close my eyes for this much, but it's like you just can't wait to get up and keep going. You're like,
exactly.
Yeah.
Exactly. So every key strategic partnership or relationship that we formed, the first thing that we keep in mind is, does it bring significant value to our members, and is it the best that we can find? If it doesn't, then we don't form it. And so that's where, it's not about how much we can make, it's about how many people we can help, and really change the mindset of the average soldier. Instead of thinking, oh, what can I spend my money on? What shiny new object can I buy? It's now become, how many houses can I buy? All right, instead of every time I PCS, I sell the house, well, hold it, buy another one, right? And it's amazing how many members have been reaching out to us saying, look, I've been doing this by myself for, quite a while, and I'm just glad to find a group of like-minded people who understand it. If you've never served in the military, you don't really get it. You think but unless you've served yourself, you just don't understand what they're going through. And that's where we keep it in the family. Everybody that we partner with has also served or has been married to someone that served in the military as well. So that's another important aspect of what we've built.
Yeah. And so, what's interesting for the real estate community, just to kind of understand, is when you're helping an active duty service member, you have someone that'll purchase and then sell, within 3 years sometimes. And so the advice that we're giving to clients that are moving that fast and uprooting their life and their financial situation, that are literally moving from one economy to another real estate economy to another real estate economy, that may not have the savings to hold 2 mortgages or 4 mortgages, it's a little bit more of a delicate dance when we're teaching them how to buy what pieces of real estate. And so the nature of active duty passive income as a whole, number one, is to really kind of show them all of the opportunities that are available, not just that single family option, but also how they can transition into larger investment opportunities. And one thing that I'll say is that, as a realtor myself, I have taken clients from positioning them to be able to sell their asset in 3 to 4 years if that's their goal. But sometimes I've taken my clients to buy 3 properties in 3 years, where I stack their owner occupied options, and they know, they buy 1 property year 1, 2nd property year 2, 3rd property year 3, and now that 3rd property is being paid for by the cash flow of the first 2 assets they own. So from a realtor perspective, if you understand these tools, you can if you're already helping veterans and that's your passion and your niche, you can really learn a little more strategic partnership with the service member mindset and the opportunities that they have through leveraging their VA loan and then looking at their other options. So for you guys, who started with the single family in your first purchase? Eric, you did. Tim? Okay, yeah. Can you guys talk about your biggest mistake that you didn't think about? Because I'll just say this, sometimes when veterans are successful in real estate, it's by accident.
Yeah.
So
most of the time for a veteran, at least that taking that first step, most veterans stumble into real estate investing by accident or by default, because, I guess since I'm already talking, I'll just start. But like I said earlier, in 2006, I was in Iraq. My wife signed on the papers on our first home. It was new construction. Great time to buy new construction, 2006, when, 100% leveraged property. And so I rolled in my VA loan funding fee. The builder paid closing costs. So I came off that closing table with no money out of my own pocket. So I felt, as a young E4 in the military, I felt like I was on top of the world. I just bought this beautiful brick 3-bedroom, 2-bath house in this new development, and I could afford the payment. Everything was great. I was getting basic allowance for housing. The best house. Yeah, it was just gorgeous, and I'd never owned a home. So I just felt amazing about it. But, it was $150,000, and it rented if I fast forward 10 years, I owned it for 10 years, it would only rent for $1,200. And so every month I'm cash flowing, as an investment, I'm cash flowing maybe $70, $80 a month. And that wasn't paying the bills anytime the air conditioner, this is in Savannah, Georgia. So every time the air conditioner would poop out on me, which was like every year, it would eat up the entire year's worth of income on the property. So it was paying the bills, but it was too lean. So now, knowing what I know, I would never have bought that property. That property would need to have netted me, or gross income on that property would have to be $1,500 a month, which that neighborhood wouldn't support that. So it was great because I started dipping my toes in it, but knowing what I know now, I never would have bought that way. And it's my feeling that anybody who's looking to buy while they're in the military should be looking at that 1 year to 3 year time frame of occupying that property, and then considering what it's going to look like on the backside as an investment property.
Yeah, you have to kind of look at both sides. And that's the biggest thing here, is that every single military home buyer is an investor. And so I really want to break that stigma that, whenever I talk to another colleague or realtor friend of mine and I talk about an investment perspective at real estate, and people have this idea that, there's home buyers and there's investors. No, every home buyer is an investor. They are investing in that asset. And, it doesn't even have to be military. If you teach every client you have how to be an investor, because I'll tell you, most homes are not dream homes, and they'll always be in their dreams if they don't learn how to create investments through real estate so they can have the passive income they need to be able to get to their dream home. And so if we, even not just veterans, but if you teach your regular clients these principles to also, they're not privy to the VA loan with the 0 down start, but a 3.5% FHA loan will get them in the door, and you teach them how to house hack. These same principles that we are like extrapolating to military, because that's our wheelhouse, are also applicable to the civilian sector. So it's important to even just take these investment principles and really think about how, as a realtor, you can shift the way you think for every single client and teach them how to build more properties. And from a real estate standpoint, when you build clients like that you partner with to build their life goals through real estate, they come back to you over and over and over again.
Yeah, we need people that are educated and helpful to the point where we want that. When we're serving, the easy button, when we have things to do in the military, the easy button is to have a real estate agent who can serve us, with us, understands who we are, where we're coming from, how we're looking at properties, and then absolutely that business is going to come right back, because we need it to be as simple as possible. So yeah, repeat business for sure if you can nail those things down for a veteran or active duty service member.
And Tim, your story is super crazy, because this is not a topic that realtors like to hear. Like when somebody tells me mobile home parks, I'm like, ugh, I don't know that I want to step into that niche. So tell me how you went from like buying a home to mobile home parks. Like, help me understand that path and where that investment made sense.
Yeah, that's a great question. So like Eric alluded to earlier, my first home purchase was with the VA loan, a single family home back in 2011 when the market was still going up. It was in the Virginia Beach area. I was stationed in Hampton Roads. And by the way, I'm still active duty today, stationed in Pensacola, Florida. I'm senior enlisted. I'm a Navy chief right now at NAS Pensacola. And so 2011, I bought a single family home and I accidentally house hacked it. It was 2 master bedrooms, one on the upper level, one on the lower level. I ended up renting out the lower level. So I was house hacking without even realizing it. And just to make sure everybody realizes really what the house hacking term is, best case scenario, which is what you can enlighten and educate your military members and really any of your clients, is you buy a fourplex with an owner occupied loan, whether it's an FHA loan or a VA loan, and you can intend to own the one unit and rent out the other 3 and either live for free or cash flow to live. So I didn't even know that house hacking strategy when I first bought my house. And then I went on deployment and got financially educated, and I kept coming across how real estate could just build wealth and you could generate passive income. I'm like, well, I could do that. So I just kept learning and learning and learning. And I kind of went all across, horizontally across all the different asset classes and ways you can make money in real estate, from wholesaling to flipping to buying and holding single family, then commercial and multifamily. And then something just drew me really, really, really hard to multifamily. So then I stuck to multifamily, went vertical and just became an expert at it. And I didn't let anything else distract me. So then I started buying apartment communities and,
okay, so when hold. You started buying apartment communities. Well, that sounds easy. What? So yeah. Hold on. So as a realtor, like if I get a client today, if you came to me, Buddhist, I want to go buy an apartment. I'm like, do you have a pile of money? What are you talking about? So stop there. Like how? Like, what do you mean you just started buying an apartment? Like.
So, I mean, I realized that there's a stigma that a lot of people, when they learn, they, eventually want to get into large multifamily. And there's a stigma out there that if you want to do that, you have to buy maybe 20 single family homes, learn the ropes, and maybe then buy a duplex, then maybe buy a fourplex and 8, 10. And I was like, no, I just want to go straight for the large multifamily, skip all that over. And so that's what I ended up doing. And I used something called syndication was the structure, where we just raised private capital through equity investors who are passive investors, which, by the way, there's a lot of people out there that have plenty of capital who want to passively invest in deals. And they're looking for active investors like us who want to offer really good returns on commercial real estate and on income producing real estate. So I just ended up finding other partners in the same area that I was in. And we raise private capital to buy an apartment community. And then to fast forward about a year, it was getting harder and harder to find deals because the capitalization rates or the cash on cash return were getting tighter and squeezing a little bit. Interest rates started going up. And then that's when I shifted gears. Well, mobile home parks is something I heard of. That's another type of multifamily housing that is, could produce really high returns that still adds pretty high cap rates. So I ended up just really focusing on the mobile home park asset for a while. And now the ADPI Capital team, not only are we teaching people how to, achieve financial freedom, we're actively doing deals. We're actively buying apartment complexes and mobile home parks. And
I was going to say we should
community how it's done.
you kind of alluded to it, Vanessa, but we should say, just so people know that we're practicing what we preach, maybe we should talk about our track record a little bit so people don't think we just own one property or something and we're teaching people how to buy apartments.
Your story is something else. And I tell people when you went to your 571 doors and essentially in 9 months, but it took, you know, the 9-month upswing to that. So go ahead and share with me a little bit about what your investment holds are right now. And one thing I want to bring to the real estate community before this is, how does a realtor, like if I am a realtor that I just kind of do residential real estate, what are you looking for from a realtor to jump into these opportunities to move these larger commercial assets with you as a real estate broker partner? So I want to make sure to come back around to that. But yes, like talk about.
I've got something to say about that for sure. I mean, from a residential real estate agent's perspective, we're always looking nationwide for those pocket off-market 100-unit or greater type of deals that a realtor could stumble across somebody who has a deal like that. Those are things that we would jump on. Typically, so some people would look for a 20. I would say just for people in general, if you come across a 15-unit or 5 units or greater, there are people like us that would be interested in those. Tim and I look for 100+ doors at a time. But there are people out there like us that would love to have that off-market 11 unit on one side of town that you work on that just came up to your attention or something. So if you're a realtor out there and you find owners that are willing to sell and you can get that commercial pocket listing, good for you, because there's a lot you can do with that. You can build a lot of relationships. There are tons of buyers out there interested in that. But you know, Tim and I are buying larger apartment assets right now. But Tim, you want to talk about your portfolio first, and then we'll go from there, I guess.
Yeah, I'm just answering your question here.
Okay, well, I'll start while you're doing that.
Okay, I'm done.
I've only been investing in multifamily for 2 years. 2 years ago, actually this month, I didn't even know that regular people could buy commercial multifamily properties. I thought it was for multimillionaires, billionaires. I don't know. You drive by these huge apartment complexes and you just think, oh, that's got to be somebody's trust fund or something. I don't know. That's just what I thought. I had no idea. So I went to a conference and I just was like drinking through a fire hose, but it was amazing. And fast forward, here we are last year, my first full year in multifamily, commercial multifamily. We closed on 571 doors. I'm invested in almost 1,200 doors total now. Tim, you're about in that same boat somewhere. You can talk about your stuff.
Yeah. And to go back to that initial question, like we love working with agents or brokers who focus and work exclusively with investors. Now you guys already talked about it, but you know, it's a different breed because the investor-minded agent understands that the client is really just trying to find value, trying to find a good deal. And not only that, if you know the agent is actually working to find these sometimes off market or pocket listing type deals that are not just on the MLS, not just on Zillow, that is where the client's going to come back for more and more and more and do repeated deals and repeated business. Then they're going to tell all their friends who are like, look, I got this agent who focuses on investors, who makes my life easy. They present me all these deals that are not public. I love working with this person. So there are a lot of great advantages of being an agent to work exclusively with investors. You know, instead of just working with maybe a first-time home buyer that's not really educated and maybe just willing to pay retail for the property just once, instead of working with an investor that comes back for repeated business. But, you know, the minute I decided to focus on multifamily, that was back in like 2016. I did about a year of educating myself, and I got here to Pensacola, and then I closed on a fourplex. 6 months later, bought a 42 unit. And then since then, you know, I've been, you know, either directly own, control, or I've contributed to the acquisition of over 1,000 units, both mobile home parks and apartment communities. And so that's what we do. That's what I've loved doing. I focus on it. And, you know, very little of my own money personally has actually gone into that. We've raised millions and millions in order to take these deals down. And that's, you know, a topic for a different day, but, you know, I could dive into how to raise capital, you know, because you need a certain mindset to understand, A, you can do this, B, surround yourself with people who are willing to show you how to do it and who are also success minded. And for ADPI, we're all also military minded, and see having that growth and abundance mindset, understanding that it's not going to be easy, and going through and working through failure a little bit is just part of the process.
You know, and it's funny because we had this question come up in the ADPI group. And for those of you that don't know, I lead the agent network for active duty passive income. So for those that are military realtors that want to get plugged into ADPI, I can definitely help you guys get connected. But what I'll say is that we had that question come up of like, I'm scared to lose money. And I'm like, I mentioned this, like if Grant Cardone or Donald Trump were ever afraid to lose money, they would never be where they are. Like losing money, like taking a loss is going to be part of the 20-year plan, just like when we do a military strategy. And I know that I'm going to have a casualty rate when I'm doing my mission planning, right? There's going to be an element of loss when we are pushing a mission. And so you just want to position yourself to be able to stomach the loss or the strategies to put, to stop the bleeding on your financial loss when you're going through the shift in the market, because don't be afraid of it. Ride the wave. Like it's part of the process.
Fail forward. We say that all the time. You have to be willing to take action and mitigate your loss, mitigate your risk in loss by paying. I mean, all your realtors out there, pay for coaching, right? You want to be better, find someone to emulate. So, I mean, that's one of the reasons that we have a mastermind, and we have a military multifamily academy, we have a military single family academy, because we've been there, we've been through those iterations, and we've seen those struggles and had those failures. So, everybody kind of can resonate with that, right? Hire a coach and get through some
Eric,
of those
you're a coach outside of ADPI. I'm glad you mentioned that, because you do multifamily coaching for not just for realtors, but actually for investors with the Rod Khleif organization, right? Right. Awesome. And Spencer, talk to me a little bit about your passion in this space, and your investment passion and stuff. I would love to hear from you.
So starting off in the financial services space, I first, 15 years of my life was just spent on investing in the markets, right? I'd have my stock market. Yep. And I wasn't really allowed to, as an employee of a bank, to do anything outside of that. No outside groups, affiliations allowed, really. So it really prohibited me from doing a lot. So a couple of years ago, when I left working for Bank of the West at the time as a private banker, to be a consultant to financial institutions, that's when I got partnered up with ADPI and Mark down in the team. And that's really when I got into the commercial lending space. Part of that, all single family. First house bought in 2006 as well. First home, 0 down, got, then found my closing costs. I thought I was the man. Then the market tanked, and it was in Albuquerque, New Mexico. Love Albuquerque, great breakfast burritos. Still own that property, actually.
You held it. Okay. I
still own it. It's been a great property. And actually, and that's the thing I wanted to bring out to a lot of the agents on this that may be listening to this. When we try to help people acquire a home, it doesn't matter to us if we're actually able to facilitate the loan. What matters is that they get the home.
So sometimes there's been a situation where
you mean if I use you as a lender?
Yeah, meaning you have questions and you're like, hey, Spence, I'm not sure about this deal, help me out. Or like, for instance, in my own case, this property that I bought in 2006, well, when we needed to move, I wanted to sell it. Well, guess what wasn't going to sell for what I owed? It was that house. So doing some research, I figured out I could do a lease purchase option where I could get a buyer to come in and give me 5 to 10% down, pay considerably more than the average rent in the market. And if they didn't buy me out within a certain time period or they backed out of the contract, I kept all their money. And I was very clear up front. Now I'm on the third person to do the lease purchase on this property. And right now I'm carrying a note at 8% on it for them. And I said, buy me out anytime. So right now I have a property that I've owned for, 14 years now. It was the very first home we bought, still own it. And I have made money every single year on it. And awesome. So it's been a great hold, and everyone who's lived in it has been happy with it. I
love the saying that they say you'll never lose a dime on a home you didn't sell.
Yeah. So it's been great. And so this last
a gentleman that's in it, I put him in what I call, or what is known as like a triple net lease, in that he's responsible for all repair and maintenance. And I'm only just carrying the note basically on the property. And he can buy me out.
Cool.
He can pay me for 30 years. I'm happy to
Smart
earn
man.
8%.
That is true passivity.
Yeah.
So, you know, and I bought and sold a few other properties as well, but when I into the multifamily space, I couldn't get into it until I was not working for banks, and didn't get into it until I became a part of ADPI. So learned a lot as well in that space. But as a private banker, you know, a lot of my clients own those assets. So I was very familiar with them and the profit that can be made from them. I know for agents that are listening right now, the best thing you can do is, in the markets that you're in, you drive by these properties all the time. You may see one that's a little run down, but it's in a nice area, but you can tell the property's been through a beating a bit. That's what we call, you know, where owners aren't paying attention to them, or they don't have the cash needed to keep it up. There's an opportunity there. That's what we call an opportunity. So when you're looking for these and you see them, you know, just look online, do a Google search, look at the property. You can see on the county assessor site who owns it. Send them a letter. If you can get their phone number, give them a call and be like, hey, I saw your property. Would you be interested in selling it? If it's in a bad shape, chances are they may be willing to. And that's when you find guys like us and you say, hey, I got a property here. It's 100 units. It's in a nice area. They're not charging what they should be. It's been mismanaged, right? So we'll jump on that all day long. And so there's many people out there that are looking for those, but you realtors who are out there day in, day out, you have the best opportunity to find them. And you can make some good money being the realtor on those deals.
Yeah, you know, and I think that's a good point, because when I'm looking at an opportunity for a client, you know, I'm specifically looking at which property, and this is in the single family space or in the multifamily space, is either undervalued, or maybe there's just a little bit of sweat equity that needs to go into this. And, you know, when you know exactly where your market is, maybe because it's in a good neighborhood, but it's a little run down, and, you know, you want to look for those sweet spots. Or like sometimes when we talked in the multifamily space, like, where is there a gap where we can recoup some cash flow that it's just not plain on paper, whether it's, you know, a lot of property management expenses or maintenance costs that are maybe just, they're not really right on paper, but the property itself could be improved. And when you find those diamonds in the rough, you know, especially when the market and the investing market is tight, as a realtor, that's where you're going to really gain, you know, your credibility for the investors. And that is something to speak on really quick, Tim and Eric. When you have a realtor that maybe doesn't have this commercial experience, right? They're wanting to go from this residential to understanding, what does an investor need? Because I know I definitely was in that space, even though I sold multifamily to my veterans, like getting into larger commercial and understanding, well, what do the investors need to know? So what are some skills or knowledge sets that you need a realtor to understand, who can bring you some valid opportunities to invest in and for you to buy?
Yeah, so there's a big there's a big difference between residential and commercial, and that's just the main thing to understand about that. You know, 1 to 4 unit residential, you know, is going to be completely analyzed different than a 5+ unit property, and, you know, with 5+ doors and beyond. So once you get into commercial real estate, the analysis is not really based on comparables and what other homes in a 2 or 3 mile radius are selling for within the last 6 to 12 months. Based on bedrooms and bathrooms in your build. It's based on operations. It's based on what's called your NOI, your net operating income. So really, it's how it operates. Your total income minus your total expenses is your NOI. So understanding really how to analyze these deals and how to underwrite these deals to understand whether it's going to be an investment that makes sense based on, like I briefly touched on before, the capitalization rate. So that is how you really get your valuation. I think understanding how to value residential versus commercial is probably the main thing to understand.
Right.
Yeah, let me answer your question, Vanessa, in a different way too. What you hit on is,
before you go to that point, remember it, because to translate what Kelly just said to the realtor language, is
Yep.
basically what he's describing is like from residential real estate, I would go look at my comps to establish value of a property, right? And but in commercial real estate, we're looking at the performance of the building, and what that becomes its value is the performance, the way that you would kind of assess a company. So you look at the performance of the building and its net operating income and what that creates. And now when you go into commercial lending, that becomes the valuation of the actual building. So it's not like comps like we would in regular residential real estate. So that's what Tim is describing, just to kind of tie down the language that he was using. But go ahead, Eric, if you can.
Yeah, I was just going to say kind of what both you and Spencer hit on is what you can look for that value is visual. I mean, there's nobody who's out there hitting the pavement more than a real estate agent, right? A realtor is out there talking to people. You network for a living. So, I mean, so listening to who's got a property management company that is mismanaging something, finding owners, listening for owners of commercial multifamily of a 5-unit or greater, looking, like Spencer mentioned, driving by that apartment complex in the areas that you serve that has weeds that are overgrown. So you talked about expense ratio. That's really your expense ratio, that Vanessa, that you're talking about. You look for those diamond in the rough things, and not to play on a word, but if the rough is high around a building, chances are they're not paying their bills very well. Their occupancy is low. There's some problems going on with property management. Those are the value add pieces that we look for. There's got to be something. We have to be able to either raise the revenue or decrease the expenses. So those are the two things that we look for. And realtors, even if they're not a commercial broker, can still listen and look for those types of value add pieces. And we're always looking for those types of things.
Yeah. And probably the biggest key in is kind of understanding who your property managers are, and maybe those that are carrying those commercial assets that know the sellers that might be ready to move them, and when you establish those relationships, then you're able to get leads on who's going to be
right. Or sometimes maybe a property management company who's been managing 500 single family properties in a certain city, and then they get a couple of commercial properties and they don't know what they're doing necessarily. And maybe those are suffering because it's not their bread and butter. So those are things, as realtors, you can look for those things and listen for those property management companies that are taking things on that they don't really know how to handle very well.
Got it.
Those could be really helpful to offload.
Yeah, and we do get referrals from property managers all the time for properties that come up. They'll come to us. Once you form a good relationship as an investor with a property manager, when something comes up, they'll be your first call. You'll be their first call. There you go.
And I'll make a little caveat point to this, because here we as realtors, sometimes we can work for investors, but the biggest gold is in actually investing yourself. So once you learn the ropes on this, getting your realtors, I mean, you're the ones at the front lines of being able to have access to these deals and the license to buy and sell them. So as you're, even hearing this, like, you should be one of the first ones getting in on these partnerships to actually become investors yourself. And so you can get out of the hard part of the grind a little bit sometimes.
Yeah.
And you're
able. I was going to say, realtors are smart and capable, and they understand the passive income and the tax benefits of investing as a passive partner on deals as well. So 100% investing in the deals too. And actually, what's great is if a realtor finds a commercial asset and people like us buy them, they can actually get part of the general partnership ownership in the deal for sourcing. They may end up with 5% of the general partnership just for finding the deal. No money out of pocket. All they're doing was listening and passing info on. And you can end up with a piece of the deal.
And some agents will even say, "Hey, I'll put my commission into it."
Right. So that's the way that they can leverage their money in on the deal. That's amazing. Tim, you brought up a good point when we were talking the other day about why you would go directly to a broker versus trying to find an owner to move a property, like, trying to undercut the realtor. What is the biggest key to that?
Yeah, such a good question. And you ask, 10 different experienced and seasoned multifamily investors. Half of them are going to say they love working with brokers. Half of them say they would rather go direct to seller. And there's pros and cons of both. It just matters on your approach, on your market, on your resources and your experience. So, for us and our team, we like working with brokers because their job, like Eric alluded to earlier, are to connect buyers and sellers. They go out there, they knock on doors, they make phone calls. They're literally got their finger on the pulse of the market to see who's selling, who's motivated. And and brokers, actually a lot of brokers you're going to see in the commercial world, they control the market because they're the ones that are almost vetting the investors, because they have all these investors coming at them and saying, hey, I want to invest. I want to see your pocket listings or off-market listings, to where before they go get listed on some of the major online brokerage where all the investors will see, you have to prove to that broker that, look, you're serious, you have proof of funds, you know what you're talking about, you're actually credible, you have the capacity to close. Okay. And once you do that, you could work with this broker, and guess if you could prove that to him and you close another deal with them, when they get another off-market opportunity that nobody else has seen, who do you think they're going to go present it to first? They're going to present it to the person that they close with, versus, a lot of times that broker, sometimes we like to go direct to seller because we can negotiate directly with the seller, and building rapport with the seller directly, which we have, the ability to do, sometimes allows you to get better deals. If you build a relationship, build a little bit of a bond with the seller, you maybe send them some letters, send them a YouTube video of who we are. And this is kind of part of our approach when we're submitting offers. We let them know how credible we are, that we're veteran investors. Sometimes it allows us to get our foot in the door and get a better deal. But it takes more work. It takes more marketing, more work. But brokers itself, if you guys are brokers in the commercial space, that's what you guys do. So we would rather say, hey, send us the deals that you got. Let us analyze them, and we'll give you immediate feedback whether it's going to work or not. So there's pros and cons of both, but we love working with brokers. We do.
Yeah, 100%. My mentor in the multifamily space, it just resonates and just beat into my head. One good broker can make you wealthy. And it's all about building that relationship and showing them that you can close, and showing them that you speak the language and have good faith and executing and all of this other stuff. And you build a relationship over 5, 10, 20 plus years, you both make a ton of money. And that's what this is all about. Everyone should be winning on all of these projects. The seller wins because they get their money out of, the broker wins, buyers win, so it's a pretty amazing thing.
What has been probably the biggest problem, and I want to come back around to the veteran piece in this in a minute, but what has been the biggest problem as you guys have acquired all these doors and all these assets? What has been like the biggest nightmare headache that you've run into that maybe you didn't foresee, and now you're like, whoa, like,
So that's easy for me. And the thing is, Vanessa, you should know by now that nothing is going to allow us to respond like that will stifle our action. We're still going to continue taking action. So I think the biggest thing that tends to hold people back is all the noise. Oh my God, the markets are going, down. Interest rates are going up. Cap rates are being squeezed. There's no deals out there. There's too much competition. It's crap. It's bull crap. And that is what holds people back. And because we maybe have to get a little bit more creative and expand our network a little bit more and get a little bit more uncomfortable, we still continue to pursue when there's a lot of people right now sitting on the sidelines. We actually just submitted an offer today on a big mobile home park. And while a lot of people are just sitting back on the sidelines waiting because they hear all this noise, I don't know what's going to happen with the market, interest rates, we don't know, what's going to happen. Like, clearly there's a lot of unknowns, especially with COVID. But even before that, when maybe cap rates started going a little bit down, and we've been in a buyer's market and a seller's market for a couple of years now. Both sides, like Eric said, have the ability to win. You can negotiate deals if you just continue finding the right opportunities. You just got to dig a little bit deeper. They're not going to be presented to you unless you give a reason why God should present these good deals to you. You can't just sit back and think that he's going to bring you all these amazing deals. You got to give him a reason by doing the work, creating the network, and putting out there to the world that, look, you're a good steward of these deals. You're going to take care of these clients. You're going to take care of these tenants. You're going to pay your property manager right. You're going to continue with an abundance mindset instead of just trying to find a good deal. It's a win-win, win-win-win-win type of situation. But
yeah, I mean, you got to kiss.
That's the biggest thing that holds people back.
Totally, and you have to kiss a lot of frogs to find the right deal, and that's the two things that I was going to say. Is you got to find the right deal that comes with a good story. Especially in 2019, unless it had a good story, a reason why there was some value to add to it and some profit to be made there, why it's a good long-term hold asset, you have to look for that. So the first thing I was going to say to answer your question is, one is finding the good deal. You always have to be finding deals, looking for deals, underwriting deals.
That's where the realtor can win, is finding the deal, finding the deal.
Finding the deal. And when you find the deal, we would look through 100 deals before we would write an offer on one. Again, large commercial multifamily. The other thing is always be raising capital. If you're syndicating, that's the other thing. So to answer your question about the two things that what is the most difficult part of it is finding the deal and raising capital. You just have to continuously do that through your network of brokers and direct to seller. And then also if you're syndicating for sure, but just in general, letting people know that, you have these amazing assets and you're buying more, and then there's incredible opportunities coming up soon and all of these other things. So raising money and finding deals are constantly, they're just never ending. Right.
Let's see, anything else? Bringing this back to the military thing. For those who work with military clients and who are in the residential space, how do you feel like they take their military clients from residential real estate purchases to that investment mindset, and then beyond?
Have them download the book.
It's just education, just learning how to get inside that investor mindset. Right now, like that book right there, it's free on our website. We have a bunch of free resources. We have a whole community, an amazing community of people who are military affiliated, who are investing, who are giving back and sharing value in our Facebook group. But just learning, instead of buying just to have a home to live in, buying with an actual investment mindset, buying for cash flow. Maybe it might not cash flow that day if you're going to live in it, which is what house hacking provides. That's the difference between buying a liability and buying an asset. An asset pays you every single month. If you buy multiple doors, or even just a single family home, if your lifestyle could accommodate renting out the other bedrooms, you could maybe live for free, or cash flow to live. But with the intentions of having it as an investment, running numbers, if you were to move out, right? And you put property management in and calculate all your expenses, is it going to pay you every single month? Is it going to cash flow? Is it going to appreciate? Is the inflation growth going to outgrow your potential rent growth? Just having all these kind of ideas and knowing how to, invest in and analyze a market, that separates really buying just for what a lot of people call a forever home, or buying for an investment. And I think that's a paradigm shift before you even kind of look into it. You're going to know, okay, am I going to put a lot of emotion to this and raise a family into it? That's fine. There's nothing wrong with doing that. But understanding what your client wants to do, whether they're buying for a forever home or buying because they want an investment, maybe they move out when they PCS, is it going to cash flow? And just understanding how to underwrite and understanding how to analyze those market analytics too.
Yeah, and I like.
Yeah.
Oh, sorry. Go ahead.
The easy button is call Vanessa, and she'll make sure you have enough education on a national level. It doesn't matter what part of the country you're in. Vanessa can help you. We can all help you. You can reach out to any of us if you want resources, but Vanessa's obviously the resource, right?
Well, you know, there's a lot of people in our country that do this. And Jonathan Rodriguez, who's commenting here, was one of my mentors, you know, when I first got into the business, and he's a veteran and amazing
Awesome.
multifamily investor here in our local market. So he's a deal finder, dude. He's awesome. I'm grateful, glad for you guys to connect with him. And you know, one of the crazy things is I love that you brought that up, Tim, where when you're helping a veteran, when he talked about, is it going to break the inflation of the rent? How do you help a veteran understand, you know, what their rent, what the economic ceiling of that rental market is, and if they're holding an asset, is it going to, you know, drown on them? Because sometimes, I mean, most of the times, especially when their spouse is losing their job, they're not going to be able to sustain 2 mortgages if they, you know, if they didn't plan for that with their savings. And so understanding your rental market and your, you know, and where your local market economics are going as a realtor when you're helping veterans invest is so important, because in the event that that client cannot sell their property, which in a lot of markets, even if it's an upswing market, selling a property with their VA funding fee on top of that principal balance is going to be a tight squeeze. Maybe they can pay their realtor commissions, but they're not going to make a profit unless you like accidentally end up in Colorado Springs or some other crazy market that's appreciating at an abnormal rate. But those are like kind of, you know, accidental opportunities. So in order for you to really teach a veteran how to reliably buy real estate and be able to give them some predictable analysis on that, look at your rental market, look at the economic ceiling of that area, and understand where that market ceiling is going to hit a threshold. Because if they buy a house that's over that, they're going to be in trouble. But another caveat, and I would love for Jason to chime in on what I'm saying, because when I have a client that does buy a property, we're now like a veteran family, their mortgage and the rent is underneath, right? So let's say they're, you know, $200 a month coming out of pocket, or a lot of times I'll have a buyer that'll buy with a HOA, a homeowners association, and the homeowners association fee is their out of pocket expense because they can't break even on their rent, right? But when I look at the long-term investment of, even if I had to put $300 a month towards this home, and then, you know, so in the year I've invested $3,600 of my hard-earned money that I took from my W-2 job into that asset, but yet my equity position gain for the year is, you know, my pay down my principal, the renter pay down the principal balance $7,000 for the year. That's still almost a dollar for dollar return. What other investment asset is going to give me that type of dollar, even though my you know, property is red on my taxes? Technically, when I look at my equity position, even on a low cycle, I still ended up winning my dollar for dollar when I look at my dollar for dollar cash on cash return investment. And how does that compare to like stock investing and other savings? You know, when you look at, even when your real estate asset is bad, it's really not bad compared to other options.
Yeah, no, you bring up some good points. And you mentioned Jason, he's another branch manager for a branch.
Spencer.
Yeah, we both do the lending side. People use our names intermittently, so it's all right. It works out. So, but you bring up some good points. So when you're thinking about holding an asset, real estate, it's not just looking at what your payment is. It's looking at, all right, how much equity am I going to expect to gain in this asset? And that will vary depending on the city, right? City and state, the type of property it is. Also, when you think about, all right, I'm coming out of pocket every year or every month, $200, right? But what is that doing to my income taxes, right? Because I'm able to depreciate the asset out. I can write off all of these expenses, right? So my net taxes are going to be significantly reduced because I own real estate. So I may save more on my income taxes by owning this property than what I'm spending extra per month trying to keep it, right, out of pocket. And so that's where it's not a one-size-fits-all approach. You cannot just say, you know, hey, because it's going to be negative cash flow, $50 a month, it's not the right choice, right? We need to look at all the numbers. And so the loan officer, along with the agent, we can really run those numbers for you and truly tell you, here's what it would look like for you. We can work with a great CPA as well. You know, the ADPI team, we have quite a few we can recommend. Depends on where you live. But the biggest thing is it's not, you need to look at all of the variables that come into play. And yes, it takes time. It's not always easy, but working with the right people can help speed that process up. Like for instance, as a lender, I have access to a system that can pull basically the equivalent of a CMA within a second. I just type in a property address. It gives me a full interactive PDF report that provides me comps in the market. It provides me rental comps. It provides me estimated growth projections in the gambit, right? And it's just access that we have as lenders to these systems that you may not otherwise know about. So we give those to our agents. We give those to our borrowers. But the biggest thing, is asking the right questions. It's not, hey, how quickly can I help close this deal so I can get money in my account? That, is the approach. There are people out there that do that, unfortunately, but our approach is, how can we structure the deal so financially it's the best fit for this borrower and their family? So we'll ask them, are you going to hold this for 1, 2, 3 years? If they're not going to hold the property for longer than a year, well, then we have to have that conversation. All right, how much money should we really put down on this property? How much should we ask for from the seller for closing costs? Right? Because you want to be able to be in a situation like if I'm talking with the borrower and they're like, yeah, Spence, I'm going to PCS in a year from now, and I don't want to keep this property. Well, then I say, look, let's have the lowest amount of closing costs possible. Let's get your seller to pay those closing costs. And the interest rate, let's use that rate to our advantage to cover additional closing costs. So your net out of pocket
interest rate
is zero. So you can get a credit for choosing a higher interest rate. Now, if they say, hey, Spence, I want to keep this property forever. Well, that tells me, hey, we need the lowest interest rate. We want that property cash flow. We still want the seller to pay closing costs, but some markets may not allow for that. So it's all of those variables that you have to take into consideration, that you can't just look for what's the quick, easy sell. And a lot of the borrowers we work with are very inexperienced. So we also make sure to take the appropriate amount of time with them to explain all of this to them and to give them the choices, to educate them. A lot of them are like, oh, you just choose what you want to do, Spencer. I said, no, this is your home.
This is your life. We were building with it. Yeah.
I'm going to educate you. I'll tell you, if I were you in your shoes, here's what I would do, but the decision is yours. I'm not here to make that choice for you, right? So that's where education is key, and it's number one across everything. But a lot of people want the easy button, and there isn't always an easy button. So taking the right amount of time and being available. I'm available.
I want to take this opportunity, this is a really good time to introduce many investors. One of the first things they learn about is something called the 1% rule. Okay. When you're first learning, it's like literally a back of the napkin type of formula to help you start figuring out whether it's going to make sense or not. So 1% rule, all that really means is if your house is a $200,000 valuation, the home is worth $200,000. 1% of that is $2,000. If you can get $2,000 for rent, there's a really good chance it might make sense as an investment once you factor in all the expenses. So if it meets the 1% rule or more, 1.5, even like 2%, which some markets you could actually get 2%. That is your opportunity to really take it to a deal analyzer of some kind and start poking holes. All right, why is this? I just want to make sure this is actually going to make sense. Let's actually factor in and punch in the PI, TI, management expenses, all the utilities, whether it's submetered or not. Is it really going to make sense? Am I going to see some cash flow when I move out and when I pay 8 to 10% for management? When, maybe putting a little bit aside for capital expenditures and improvements and repairs. So the 1% rule is like one of the first things that investors learn about. So if you even could educate them on the 1% rule, or if you know how to talk about the 1% rule, you're going to start to understand how to get into their head and you'll be in their wheelhouse. The next step is if you could explain the 5 profit centers of real estate, why people buy and hold real estate, why more millionaires are made in real estate and anybody could do it, is through the 5 profit centers of real estate versus just buying a stock and hoping that it'll go up in value. And that's something that we talk about all the time in our community, and we educate in our courses, are the 5 ways that you can make money, really the 5 profit centers when you buy and hold a piece of property.
I love that.
Yeah, that's a great point. I mean, most of my properties are 1% rule properties, even a couple turnkeys that I bought. I have one, and I was about to say, Tim, I'm like, man, the 1% rule, the example you gave sounds like, in a military community, a $200,000 property is not going to rent for $2,000 a month. I mean, you think that, right? Yeah. But it's not always the case, and everyone just has to look at their situation. I just realized as you said that, I have a property that I bought for $50,000 that rents for $750 a month. So there are properties out there that have amazing cash flow. Yeah. Depends on, you just have to.
We have multifamily in Alaska. There's a lot of
Eric, you breezed over turnkey just to help people understand what a turnkey investment purchase is. Could you just really talk about that?
Yeah, I mean, it's, typically so a turnkey buyer, turnkey provider will buy an off-market deal, and sometimes they'll use a wholesaler, sometimes they'll use a network of realtors. They'll buy it, they'll renovate it, they'll put a tenant in place and provide a pro forma. And typically, like the ones that I'm buying from, anything that does not have a 10-year lifespan left is replaced. So that's roof, granite countertops, stainless steel appliances, flooring, paint, whatever. And then put a tenant in place. They provide you the pro forma. Again, I look for 1% rule or better, even if it's a little bit less than that, and maybe we can hit on that too. But I don't think buyers should be really scared away if it doesn't hit the 1% rule. But, so anyway, then I, as an investor, go in and buy something that's already renovated. I didn't have to do any searching for it. I put down 25%, 20 to 25% down. And then I've got a cash flowing asset. So, and then, the turnkey provider gets the meat. Basically, they're the ones making the money on the flip, so to speak, but they're selling them to investors. So I've only done a few of those. And
so you don't capture the equity growth, but you're buying a property that's rehabbed, tenanted, managed, and it's already rented out. Like it's good to go. It is a turnkey purchase.
It's a low work property, like
low barrier to entry too for guys who are deployed, guys and gals who are deployed. We've had members buy turnkey properties because they're in Afghanistan or still in Iraq or wherever they are across the world, and they don't have that active participation capability right now, but they want to get investing. So, I bought one for $150,000 and it rents for $1,500 in Kansas City. I'm cash flowing net $400 a month on that property.
And that's one thing I wanted to drive home is for military real estate investors, we have a relationship with who we believe is one of the best turnkey providers in the nation, and that's Bridge Turnkey. And they are a turnkey provider that we have a special relationship with because it's almost a very perfect investment decision for a military person who's deployed or not, because maybe they don't have time to go find a property, rehab a property, manage contractors, find a property manager. It is literally a package. It's an investment with a bow on top of it. And you have to still know how to underwrite a little bit and understand the analysis, but it could be a very solid choice as an investor being in the military.
Vanessa, let me ask you this, Vanessa. How many realtors are wholesaling also?
Not a lot. They have to be in the commercial space. Yeah, not a lot are wholesaling. I don't think that's a concept that we even talk about a lot as a community.
That's interesting to me because I feel like a realtor who's out and about and doing showings and just very active in the community. I mean, essentially a wholesaler is just finding, they don't have to have a license of any kind. They're buying a property or putting a property under contract and selling the contract to a flipper for a profit.
Right. Yeah.
So I feel like a realtor, if you're already bird dogging, so to speak, and just driving around and like using your eyeballs to look at a house that looks like it's in a nice neighborhood, but it's the worst house in that neighborhood, perfect wholesale opportunity for an investor to snag.
Yeah. And, I think there might be some laws in each state that vary based on what we're allowed to do as a licensed professional, whether we're allowed to go write an offer and then sell that to somebody else.
Gotcha.
Yeah. I think that might vary in every state. And also I think that it might not be something that's talked about enough. So realtors are scared to even try to look too creative and then, mix that with what you're doing. But if that's your wheelhouse, if flippers are your niche, if investments are your niche, you need to find out if that's an option in your state to be able to wholesale a deal. And so Eric, explain to a realtor what that would look like to them. They find a deal, they write an offer on the deal, but they sell.
Just Joe Schmo, anybody can, just like I'm a buyer of real estate, right? I'm just a person looking for a place to buy, write an offer, And then on the contract, it's Eric Upchurch and or assigns, and then you have a list of buyers. So though your buyers would be flippers, people who are actually want to do the work on the place and force that equity, force that appreciation on a house. And you just contact your buyers, and they're wholesaling Facebook groups and all kinds of stuff. But yeah, you have a property under contract for $30,000. You know the after repair value is $100,000. You pulled CMAs. You know that it's in a good neighborhood and whatever. You can then sell that contract for whatever. I mean, it's completely dynamic. So $10,000. So you sell it to, let's just an example. You sell the contract to a flipper for $10,000. So they're buying it at $40,000, and you made $10,000, never even owned the real estate. You're just passing the contract to them. They close it, they force appreciation and sell it or hold it, and it's worth $100,000 after renovation. So there's got to be some meat on the bone and all that stuff.
Yeah. So Jonathan, who is my friend here, is saying in Alaska you need a license to wholesale. So it might be something that is specific. Yeah. Very cool.
It's the lowest barrier of entry. Like anytime you see people like gurus promote, you can get into real estate with no money and no credit. Technically, you actually don't need money or credit because you're not buying real estate and you're not selling real estate. You're finding an opportunity. You're putting it under contract to a buyer. That's it. Yeah. You're just charging an assignment fee, and that's just another way to wholesale. But it's a great way to learn the legalities, how to find opportunities, how to put deals under contract, like the technicalities of the contracts and everything. And that's a really good way. If you can get in and start successfully wholesaling real estate, you'll probably do pretty well once you have enough capital, or you could raise capital to buy and hold real estate. So a lot of people start by wholesaling without a whole lot of knowledge, whole lot of cash, or maybe poor credit or something where they can't get approved for a loan. A lot of people, it's a lower barrier of entry, but there's opportunities everywhere to wholesale. Wholesaling is great.
Yeah.
Wholesaling is one thing that the one thing in real estate that maybe there's other things too, but I feel like it's the one thing in real estate I haven't done. I've flipped enough, so I know I've worked with wholesalers. That's how we get our deals. But I've never wholesaled myself. In fact, I have a friend who's wholesaled apartment complexes, large multifamily apartment complex, made $100,000 on a contract. So,
just from holding the contract, he found the deal first, is what happened.
He found the deal, put it on a contract, and sold the contract to somebody for $100,000. Yeah, and so, but some people, it's interesting too, because some people will say that wholesaling is not real estate investing. You're not owning real estate. You're owning paper, and it's a quick transaction.
That's amazing. Well, cool. Well, ADPI, I just want.
There's a couple of questions, Vanessa. I know the last one, Jim, how can we start the vetting process to be listed? I assume maybe he's talking about an ICC agent. I don't know if you know Jim Goodwin, Vanessa. He's got a question for us.
How can we start the vetting process to be listed on the site? Awesome. Yeah, Jim, offline we can talk. You can connect with ADPI, for actual the investment stuff. Since ADPI is exclusive with the team with Realtors, our veterans or military spouses, we can talk a little bit about that offline. But yeah, absolutely, we can connect.
I would like to share something real quick, Vanessa.
Yeah.
Y'all may have heard of the CARES Act being passed. Talk to your CPA, right? I'm not an accountant or a CPA, but from the chatter that I've heard, you can take up to $100,000 out of your retirement account and with no penalty, and you can defer your taxes over 3 years. So you still need to pay income taxes, of course, on it, but no 10% penalty during this COVID issue. So there's always an opportunity to make money no matter what market we're in. And right now we're in something that we've never been in. The government's giving out a lot of free money, making it easier to access our money in retirement. So if you're sitting on quite a bit in your 401k and you'd rather have it invested in real estate than in the stock market, you can, as of now, but again, talk to your CPA, take up to $100,000 with no penalty and defer your income taxes over a 3-year period. So you play your cards right, you can take down quite a few properties. like Eric was talking about earlier.
And the opportunities are coming, you know,
Yeah.
the opportunities are about to start to like shake out to the surface. So whoever is cash rich here in this next cycle is going to win on some opportunities. Just like the cycle we saw between 2008 and 2012, those that could play in the best opportunities were those that had the cash to move them. And so the nature of this like shakeup, you know, is going to create a lot of opportunity for everyone. It's just knowing exactly how to play your cards in it and knowing which opportunity to, you might be able to catch a couple of opportunities if you ride the wave correctly.
Exactly. So feel free to reach out if you have any questions. Happy to help on that. From a lending side, 25% down, you can buy an investment property pretty much anywhere in the country.
Yeah.
And rates are actually still pretty decent on the conventional lending side.
And
Spencer, do you want to discuss AmNet at all, just to give a brief overview of what we do for AmNet?
At least,
Yeah,
at least
so-
it's uniqueness. Talk
Yeah.
about it. I mean, it's first.
Yeah,
ever.
so-
Amazing.
AmNet, American Mortgage Network, is 100% within an employee stock option plan. So meaning the employees are the owners. Unlike other companies where an ESOP is formed, a lot of times the previous owners of it will have a debt owed to them by the ESOP. Our company has no debt owed to anybody. So the employees are also the owners. So that was one of the reasons why we wanted to be a part of it and form a branch of it and starting our own mortgage company from the ground up. We liked what they were doing. We had good synergies as well as best products and services that we could find. There hasn't been a time where I've been matched up against a lender that I couldn't beat or at least match what they were offering, as well as access to pretty much everything that's out there. Nowadays with the whole COVID stuff, you know, it's been a little interesting, I'll be honest. Still closing deals though, still closing them 30, 45 day timeframes, depending on the transaction itself. Interest rates on the VA side, they're kind of all over the place. I mean, it changes by the hours. But when it comes to the ability to move quickly, it's important to have that nowadays, especially as we're entering times where a lot of the borrowers are coming to me saying, hey, I got told by my bank, you know, we can close for 60 to 90 days. Couldn't lock it until we have a clear to close, right? A whole bunch of stuff is going on right now. Getting rid of non-QM, below 620 FICOs. Like people are struggling to be able to place loans nowadays, whereas we aren't because of the way we're structured. We're doing them in-house and we're brokering them as well. We also are looking to hire and expand our agent of LOs across the country. So if you have served in the military or married to someone that served and you have loan officer experience or want to get in the space, feel free to reach out as well.
awesome. All right, guys. Well, we'll wrap up here. And I just appreciate you know, obviously this talk of a different dimension in real estate that we don't often get or make the time to like get smart on. So thank you so much about just how you can go from military, you know, home ownership to way more complex investing that is like more complicated or more simple and complicated, but easier to achieve than people think.
Absolutely. Again, mindset is everything. And we love talking about ways that you can improve your mindset, because you have to grow your mindset as you're learning all this stuff. Otherwise, you know, you're not going to be able to achieve your goals. If you have a goal to close a 100-unit apartment complex, but you're not growing as a person to get to that point, it's going to be really difficult and you're going to struggle a lot. Just learning how to add more value to more people and improve productivity, you know, improve time management, just be happier, more fulfilled, more energy levels. These are all the things we love talking about because it's a lifestyle and it's a culture. And I've learned one of the best things I've learned about being a better investor, I've just became a better person. Because the more value you can give, the more you'll receive in abundance. Whether you're an agent, whether you're an investor, whether you're just in business or in corporate America, whatever it is, the more value you deliver, the more abundance you'll receive. And that's why we all talk about growing and mindset, because it's so important to this whole entire fun journey that we're all on right now.
Yeah.
Speaking of growing and investing, last thing I got to say is if anybody here who watches this up to this point, if you want to reach out to us, please do. I would love to take a call. I'd love to field, you know, an email from you, whether you're a veteran or not. If you're an agent who wants to learn how to service veterans better or active duty service members better, please reach out to me. Vanessa, I don't know if you want to if we can share email addresses or whatever.
Yeah, well, it's super easy. It's Eric at Active Duty Passive Income, Tim at Active Duty Passive Income, Spencer at Active Duty Passive Income. So super easy to remember, and everyone has conventional spelling, right?
Yep.
Awesome. Well, thank you guys so much, and I appreciate you. Thank you for your time.
Thank
you
you
for having us.
All right, guys, have a
All right.
great day.
Be great.
Thank you.
See you guys.
Have a
Bye.
good weekend.